That is your closing bell on Wall Street, and now it's Market Domination Overtime. We are joined by Jared Blickery to get you up to speed on the action from today's trade. But first off, let's see where those major averages ended up here as we are still coming to the market close. Looking like the Dow Jones is just about flat on the day. Your tech-heavy NASDAQ taking on a little bit of the gains here. We saw that Mag 7 basket really doing its job as the somewhat defensive sector of the market today. All of those 7 names moving to the upside here, but you had your S&P 500 not being able to make out those gains. It is just below the flat down, lying down about 0.1% here. You can see over the past 5 days some volatility in your S&P 500 over those 5 days. It is still down a little over 1%. I do quickly, though, want to flip the board over so I can get you a check on Bitcoin for the day, because Bitcoin is above 111,000 for the first time ever. So there is still some risk on sentiment to be had when it comes to those Bitcoin flows today. But let's get a look at the sector action in the major averages with Jared Blickery. Hey, Jared.
Thank you, Maddie. Yeah, I think that Bitcoin breakout really meant a lot for risk markets, and also we're seeing that extend to some of the smaller stocks. Before I get ahead of myself, let me just recap here. Today began a little bit auspiciously with the 30-year surging to new highs. Typically that is risk off for stocks, but it declined a bit. And if you take a look at the closing yield on the 30-year, it was actually down on the day by 3 basis points to 5.07. And then US dollar index was up. I consider that a positive because the world is not saying we need to get rid of all our dollars. But let's check in on the sector action and just kind of explore what was happening today. Consumer discretionary, XLY, in the forefront. That was up 0.4%. Looks like tech and industrials basically break even. For the most sectors, though, that we're seeing here, they were in the red today. Utilities leading to the downside, followed by healthcare and staples. So some of the most defensive getting sold off the most, which isn't terribly bearish. And you take a look at the NASDAQ 100, there's a lot of green right there. In fact, a lot more green than red. Tesla leading the Mag 7 up about 2%. If we take a look at the Dow, we do see a little bit more red coming in. This is more of the industrials, some of the staples taking a hit there, and also some of the pharmaceuticals. J&J down 0.4%. United Health down 2% as well. But check out the meme stocks. I haven't shown this board in a while. That is a lot of green. So a lot of the smaller, unprofitable sometimes stocks, and there's some profitable ones mixed in here, those have done really well today. Look at GameStop, up 10%. I've been taking a look at this all year long, clawing back to break even for the years, down just fractionally. Coinbase up 5%. And Maddie, you were just taking a look at Bitcoin, so I don't need to go there again. But I will show you the ARC innovation components. This is unprofitable tech for the most part. Tesla's profitable, but a lot of these issues are not. And we're just seeing broad-based strength in some of these smaller corners of the market that also happen to be a bit more speculative. So maybe with this Bitcoin rally, there's a little bit more speculation going on, and that's just speculation itself. On that note, I will send it back to you, Josh.
Thank you, Jared. For more on the latest market moves, let's welcome in now Sébastien Page, Rowe Price, head of Global Multi-Asset and Chief Investment Officer, as well as author of the book, The Psychology of Leadership. Sébastien, always great to see you here on set.
Likewise. Thanks for having me.
So let's start with an issue front and center for investors right now, rising rates. 2 questions, Sébastien, why are they rising? And 2, how concerned should investors be?
Rates can rise on higher growth expectations. I don't think that's going on over the last few days. Rates can rise on higher inflation expectations. I think that's part of it. Rates can rise on investors being worried about the risk of holding long maturity bonds. I think that's what's going on right now, and it's related to the budget deficit. We're running deficits that pre-COVID at 7% of GDP, we would only run in a recession. And now this budget measure is making its way through Congress. That's getting bond investors nervous. Josh, the bond vigilantes. That's why we call them the bond vigilantes, is they step in when spending gets out of control.
And so to my second question, you're talking to T. Rowe Price folks. They ask you, how worried should I be, Sébastien? You tell them what?
I'll give you a nuanced answer.
Okay.
We are underweight treasuries, so we're positioned for rising rates. So you should be concerned about rising rates. And I think inflation is part of it. You have rising commodities on the horizon, in my view. You have wages growing at 4%, you have a housing shortage, and you have tariffs, which are inflationary. So the risks to inflation is to the upside. However, I want to give you the nuance. I don't think this is cataclysmic. I don't think this is going to break risk assets and be a financial disaster, because there's still a lot of demand in the long run for US Treasuries. At the same time, we have to worry about these levels of deficits, but this is not like the world's falling apart kind of situation. And you saw stocks did okay today.
Well, do we have to worry about these levels of deficits? Because I've been having sources tell me this is a massive problem for my 10 years as a journalist, and it's never been an issue. Is this nearly $10 trillion that Moody's projects this tax bill to cost really going to be the thing that drives the economy over a cliff on fiscal spending?
I don't think so, but you have to be careful, because one way out of it is with economic growth. That helps. And by the way, there are lots of developed countries, major countries, that have debt to GDP ratios of above 100%.
Right.
And
we're at 6%.
we have, So, but the debt to GDP itself, the stock of debt is really high, but it's also very high globally. And when investors want safety, they continue going to treasuries. But I'm with you 100%. We've been talking about deficits as a risk forever, right? And people like to use the analogy of the slow boiling frog. Does that ring a bell, that analogy? So you put a frog in water, you increase the water temperature, and at some point the frog's going to die, and it's not going to realize that the water's increasingly getting warmer. The reality, scientifically, by the way, this has been disproved. So in the studies, the frog actually jumps out, and I think that's actually that's a good analogy for what we're going to do here, where the frog is going to jump out before it gets to a cataclysmic event.
Let me get your take on the U.S. stock market, because we have seen this incredible move off the April lows. So you would characterize valuation as what now, Sebastian?
Back into expensive territory.
Stretched.
Yeah, as a general statement, especially relative to bond yields, we're no longer in a zero rate environment, right? So generally at 21 price earnings ratio, stocks are fairly expensive. We're actually close to neutral between stocks and bonds in our tactical
That's how
asset
you're
allocation.
positioned.
But just, not every stock is expensive. That's like a blanket statement, right? But if you look at the average stock in the world, you take the MSCI All Country World Index, equal weighted. The average stock in the world has a price earnings ratio that's actually close to its long run average. And we're long European stocks. European stocks have a price earnings ratio of 15 right now. That's about their 10-year average. So not every stock in the world.
Why are you
is
long
expensive.
European stocks?
We're long European stocks as a tactical trade where we look out 6 to 12 months, and we're seeing a valuation discount, even controlling for sector level differences of 20, 30%. That's fine. It's been cheap forever, and it's been a value trap. But we're also looking at catalysts that we didn't have before. Stimulus out of Germany, really substantial defense and infrastructure spending. A banking sector in Europe that now benefits from positive rates. The banking sector was sort of really broken post-financial crisis in Europe. And you had zero rates, which makes it really hard as a bank to make money. Now they're trading at 1 times book value. Before the financial crisis, they were at 2 times book value. So we like financials in Europe. We like some healthcare. We like some industrials. So there are other catalysts also. You have the central bank willing to lower rates, maybe faster than the Fed. So there are quite a few catalysts here that could work. Europe's already up 10% relative to the US. But guess what? Over 10 years, it's actually down cumulative 138. So there's still some valuation difference to unlock thanks to those catalysts.
How does that frame your thinking on international small caps?
So on small caps in the US, we're underweight, but outside the US on international small caps, we're overweight because they tend to have better profitability, even though they've sold off as much as all small caps globally. So we like the difference in the return on equity for the international small caps. So we have a small tactical overweight in that asset class there.
Sebastian, always great to see you, especially
Likewise.
on set.
Thank
you, my friend.
Thank you.
Stick around, much more market domination overtime still to come.
Lightspeed Commerce reporting an 18% rise in full-year revenue for 2025. Looking ahead, the company expecting lower revenue growth for 2026 in the range of 10 to 12%. The point-of-sale system software solutions provider saying its outlook is reflective of its view on the macroeconomic environment. Here's a closer look. We've got the CEO, Dax Dasilva. Dax, great to have you on here. Talk to me about what you are most concerned about in the quarters to come. I know you cite macro uncertainty for the guidance that disappointed investors today, but we're hearing other companies that I imagine utilize POS systems like Lightspeed that they are not as concerned about the macro environment coming forward here. So which is it?
Yeah, thanks. Thanks for having me. So we did see some pressure, some macro pressure in Q4, which for us is the January to March quarter. I think it was mostly February and March where we saw softness in the macro, but we did see some stabilization in April and no further deterioration in May. So I think that the change in the guide for us or the guide for fiscal 26 is really because we've revamped our strategy and we're focusing on outbound sales in two growth markets, North America retail and EMEA hospitality, building out our outbound sales teams. And that's going to take some time to ramp. We started hiring that in January and are halfway through the 150 reps that we're hiring to capture that growth opportunity. And so as we go into into fiscal 26, we'll start to see the results of those reps on the ground.
And Dax, you always have interesting line of sight into the consumer, and so I wanted to get more color and commentary from you on that. I mean, if you were to characterize the consumer, Dax, and you were to compare what you're seeing, now versus, let's say, 6 months ago, how would you characterize it?
Yeah, I think that we're hearing a lot from businesses in retail and hospitality in North America and Europe, and there has been at different moments, a lot of talk about changes in trade policy, and it does shake consumer confidence. And so as a software vendor that serves, mid-market SMB, retail and hospitality, we've been supplying, we've been pitching tools in terms of analytics and insights and tools for them to be able to order directly from brands or brands in different countries if they want to optimize their spend during such changes in trade policy, as well as tools for them to be able to borrow capital, to be able to expand their business in times of economic uncertainty. And that's all to respond to changing consumer sentiment and allowing them to sort of weather a period where there is perceived instability. Like I said, we saw a lot of the impact of that in February and March, and that sort of sentiment seemed to have stabilized in April.
Talk to me, too, about the $556 million impairment charge. Again, I know you cite macroeconomic uncertainty specifically for smaller retailers as part of that. Walk me through that number and how you got to that.
Yeah, I think that number is triggered because there was, a compression in our share price, and that's sort of an accounting trigger that causes us to do a write down as a goodwill impairment. But it's a non-cash charge, and it doesn't impact our ability to operate the company or really impact our ability to do our strategic pivot.
What about restaurant spending, Dax? Economists often make a beeline for that because it is so discretionary. What are you seeing there?
Yeah, so we primarily operate in the European restaurant space. We have an incredible position there. If you want to open a restaurant chain or you have a restaurant chain that's pan-European, Lightspeed is the number one choice. And yeah, the discretionary spend, especially since we're a lot of Michelin star restaurants, high-end restaurants or resorts, we see consumer sentiment really affect discretionary spend. But like I said, we saw a lot of the softness in North America hospitality, where we have a smaller base, and primarily in the early months of the calendar year. So but like I said, stabilized.
Sorry to cut you off there, Dax. I just thought it was interesting to hear you talk about the shift that you're seeing in that higher income consumer outside of the U.S. Can you talk to me a little bit more about how you're seeing different income groups behave differently in terms of their expenditures?
Yeah, I think that as you have consumers that maybe have higher discretionary income, there's a little potentially less impact to their overall spending habits. And in the U.S., where we have a smaller base of restaurants, but potentially less of the Michelin star class restaurant, that we have, we see a bit more of an impact when there is a change in consumer confidence and sentiment.
Dax, really appreciate your time today. Thank you so much for joining us. We're turning our attention to the toll that hackers and cyber criminals are having on businesses and consumers. Just yesterday here, Microsoft's Digital Crimes Unit announcing an international operation to disrupt Llama Stealer. That is a version of an info-stealing malware that's popular with criminal gangs and other bad actors globally. We've also seen the impact on Coinbase in recent days, a data breach there, interrupting what should have been a crowning moment as it joined the S&P 500. Our next guest is Joe Jones, who joins us from Oslo. He's CEO and co-founder of Pistachio, a cybersecurity training platform that helps organizations with AI-powered simulations and trainings to protect themselves against these kinds of threats. Joe's also been watching some very serious retail hacks across the pond here. Great to have you on here, Joe. Talk to me specifically here first about these cyber hacks we're seeing in companies like Coinbase that we mentioned, even Microsoft as well here. What do these kind of massive companies being hacked, what does that signal to you about just how susceptible companies are to these kinds of events?
Yeah, no, appreciate it, and good to be on. But I think the reality is today, with the sort of AI generation we're in, everything's getting more and more dangerous. As you mentioned, we've seen Coinbase, we've seen in terms of, as you mentioned, Microsoft, and especially in the UK, we have seen a pretty big hit on a lot of retailers recently. Ultimately, cybercrime is getting more and more accessible for the sort of average person. Let's say, cybercrime as a service is pretty rife these days. You can go onto the dark web. Luma, in terms of the ransomware you sort of alluded to a second ago, it's become a commodity malware, so it's not hard to get. And we're seeing a democratization of cybercrime tools in general. So anybody with a bit of cryptocurrency can go onto the dark web and they can buy these tools.
Joe, you mentioned AI. I'm just curious, how is that technology already impacting the cybersecurity space, both offensively and defensively?
That's a good question. So talking specifically about what we do, we work with the humans in an organization to do two things, primarily to test their vulnerabilities, so understand where they might be vulnerable in terms of clicking on links, in terms of answering calls, those types of things. AI has just added an extra tool to attackers in terms of making those more sophisticated. So the tools today have gone from looking for, or previously have gone from looking for spelling mistakes, looking for things that are easily identifiable. Everybody today has access to make maybe an email more sophisticated. We can synthesize voices when it comes to making calls. It's getting a lot more dangerous, both from a defensive side as we work. So we've created tools to help train people on how we, identify and we sort of remediate these things. But simultaneously, the hackers are working on the other side to leverage these tools to attack companies. So it's both, as you mentioned, offensive and defensive.
What should consumers know about how they can protect themselves from these hacks? I know that you have been doing some work on hacks at department stores, but I also think about the risks of hacks to these large language models that especially a lot of young people are putting a lot of very personal information into. What can consumers do to take power back on this issue?
I think the age-old thing is cybersecurity has been something for the IT team to manage. I think on an individual level, we need to start understanding that we're living in a digital world. Today, it's more important than ever to be able to protect ourselves whether we're at work, whether we're at home. We need to be able to protect ourselves when it comes to working online and sort of our online lives, right? So educating yourself, I think that's the first and foremost thing to talk about here. That is the most important thing. You need to educate yourself. You need to understand what you're looking out for. If you get a suspicious link, if you maybe receive a call claiming to be your bank or somebody sort of similar, you need to be able to identify those things, and that's kind of the primary thing here. And then of course, once you're able to identify those things, everything becomes easier. And I think generally speaking, operating with zero trust, that's always an important thing. So it's a little bit cynical, but being suspicious of everything that you're receiving online is only going to help you in today's world.
Final question, Joe. I'm just curious. When we talk about these cyber criminals, who are we often talking about, Joe? I mean, are these often is it the lone individual? Is it organized crime? Is it the rogue state? Is it all three?
It's all of the above, right? I mean, it can be anybody. If I've got an extensive knowledge of how to sort of leverage IT systems in order to do things that I probably shouldn't be doing, I might do that. Simultaneously, of course, we've got state actors. We're seeing that a lot. And then to your point, there's multiple types of people that might be trying to attack us for a variety of reasons. So there's no one specific person or organization or state that we can pin down. It's rife with crime today, and we need to be vigilant towards everything.
Joe, great to have you on the show today. Thanks so much for your time. Appreciate it.
Appreciate it. Thank you very much.
Time now for What to Watch Friday, May 23rd. We're going to start off on the housing front. We're getting some fresh housing data in the morning with new home sales. Economists forecasting sales in April to come in at an annualized rate of 695,000. That is compared to 724,000 in March, signaling a weakening demand in sales amid elevated mortgage rates and affordability pressure.
Taking a look at the Federal Reserve, another round of Fed commentary coming throughout the day. We've got Fed Governor Lisa Cook, Kansas City Fed President Jeffrey Schmidt as well. This coming after comments this week from Fed Vice Chair Philip Jefferson, who said that Fed policy is in a, quote, very good place, and that the Fed can be patient with interest rate policy.
And finally, big moment for Paramount and IMAX this weekend. Mission Impossible, The Final Reckoning, is releasing in theaters tomorrow. The latest movie, which was filmed for IMAX screens, is the 8th installment in Paramount's flagship franchise.
There you go. Certainly something for you to do this weekend. That's going to do it, though, for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it is Asking for a Trend. I've got you covered for the next half hour. It's the latest and greatest market room stories, so you can get ahead of the themes affecting your money. Stay tuned.